Good morning. This is April 6th, 2013. Welcome to another edition of the Committee for the Republic of Canada's Leadership Discussion. My name is Jean-Philippe Lebleu, member activist of the CRC. I'm accompanied with Matthew Arrett-Kump, also member activist with the CRC. And today we're going to talk to you about the actual financial and economic world crisis, but more specifically on the latest developments regarding the island of Cyprus. I'm sure some of you are familiar with, and we're going to talk about that and the implication of what's happening there for the whole world, but more specifically for Canada. And I think maybe just as a start, I'd like to just clarify a few things for people regarding this financial crisis that we are in right now. That first, what we're seeing, especially since 2008, 2007, is actually the result of a many decades long crisis that started in around the 1970s, where our system of national development, this idea of economic development, there was a radical shift where we went away from the development of the productive powers of labor towards a money policy where money became the intrinsic value of the world economy. So we went away from science, went away from industry, went away from education, went away from healthcare, and we went back into this idea that money is the master. Now, people are most familiar with what's been happening, since 2008, when various banks at the international level went bankrupt, and which then led to a policy of bailouts. Now, those policies started with the Bush Jr. U.S. administration on the end of 2008, and then that policy was continued by the Obama administration very fervently, and at the same time also in Europe by the European Central Bank. Now, this was a policy where governments were involved into buying out the toxic assets of those various banks, JP Morgan, Chase, Citigroup, etc., in order to keep those banks afloat. But obviously, that meant that governments had to implement various policies of massive austerity on their population. We've all heard, various horror stories from Greece or the United States where people need food stamps to survive. Old people cannot afford the medication. Young people cannot eat. Also, like various spread of the increase of, for example, the suicide rate in Europe, unemployment, etc. So there are physical consequences of those bailouts, which was also accompanied with a policy of what was called quantitative easing, which is basically a hyperinflation where various institutions were involved in printing a lot of money to try to keep, again, that banking system afloat. Now, one of our colleagues in the United States made a small graphic of that quantitative easing that, since the beginning of it, so over the last 3-4 years, there's been about $4.4 trillion that were printed as a form of hyperinflation. And you can also see on that graph that the banking activities actually been reduced in the sense that money was not lended for the economy as it should have been. There's actually a reduction of the lending practices. And the other little red line that you see represents what we call quantitative stealing, which is the new form of insanity that we see right now in this attempt to sustain the imperial banking system, called a bail-in. And we're going to jump into that question, try to understand what that exactly is. So I'd like to let Matt maybe start off talking about what's the situation in Cyprus and how this affects the world situation in Canada in particular?
Okay, well, I think you laid it out quite well. We've been experiencing over the past 4 years has been a complete breakdown of the system. It's not a recession as much of the media has been promoting it. It's something which just comes organically every few years, ups and downs, bulls and bears. But no, we've come to the end of a process that was really kickstarted in a serious way with what you mentioned regarding this period in the early 70s when money was disassociated and all values were disassociated from not just gold, but the entire productive process underlying nation states. So to have a sovereign nation state, you have to be producing real goods. You have to be not just consuming in a post-industrial model, but you have to be also thinking long-term about your infrastructure and about your science to overcome your limits. And that was the way people used to do things. Call it what you will, but there were problems with it. But the principle was money was not the source of value. It was what are you doing for the future. Now when that was destroyed with the Bretton Woods destruction, we've gone into a new, gotten into a new insane logic of reproducing a monetary system in the form of a cancer by finding new ways of gambling, new ways of putting values on price differentials, on securitizing assets, and then betting on insurance on those things, which have far outpaced the actual securities underlying the money, so-called, that is being bailed out, which is now, this is what we often refer to as, people call as derivatives. So these things, you can't print more money to bail these out anymore. At this point, they're upwards of 20 times the global GDP. Estimates have them between 600 billion and 1.5 quadrillion dollars of the actual GDP. And so what we're at right now is a new phase of the collapse where what we're seeing is that, like you said, this new thing in Cyprus is the template for the world. It wasn't just a localized case of Cyprus, but what they're saying now is rather than go in from the outside with central banks injecting taxpayer liquidity to buy up those assets to put on its books, as the Federal Reserve or the European Central Bank have been famous for doing, or now the Bank of Japan. Rather than do that, what they're saying is we're going to have a bail-in. We're going to just take unsecuritized or uninsured deposits, effectively. People who put their savings, their RSPs, their pensions, their business loans, things that are actually just outside of the $100,000 in Canada. At least it's $100,000 in Europe, it's 100,000 euros. In the US, it's $250,000. But outside of that insured quantity, they're saying we can just steal that and put it into the bank that needs the bailout, or else it's going to collapse. So right after this was done in Cyprus, and shockwaves were sent around the world where you have echoes now of bank runs. Same type of thing we had in the Great Depression, where now people think, well, if I can't keep my money safe in the bank safe, that word has to, we have to give a new name for that thing. I got to take it out, and that's what is in danger now, setting off the destruction of the system. So Jeroen Dijsselbloem, as soon as this event happened in Cyprus, Jeroen Dijsselbloem, who is the Holland finance minister and the head of the Eurogroup of finance ministers, said that this is going to be the template for all of Europe. Hans Knott, the next day, March 28th, who's on the board of directors of the Bank of International Settlements, said that this approach, quote, will be part of the European liquidation policy. So this is for the whole Eurozone. What exactly it was, for people who are not fully familiar exactly, 37% of all deposits over the $100,000 insured limit are being converted into common stocks in the Bank of Laiki and the Bank of Cyprus, which are the two banks that needed the injections, right? 22% will never see interest, and the remaining 40% you'll only get back if the banks become healthy again, and then you can. Because right now, everybody rushed to the banks, right? Everybody rushed all across Cyprus to the ATMs, to the banks, and only to find out that they were closed. They locked down the banks for a week. Right? They locked down the ATMs. You couldn't get, at a certain point when the banks finally opened again, you couldn't get more than $300 out in the course of a day. So there's a shutdown of the businesses. It's going to completely wreak havoc, as we're seeing in Greece, as we're seeing all over Spain, and increasingly over the North American hemisphere too. You've got a total destruction of your physical economy. And so now people like Dieselblum, Hans Knott said, oh, no, what we meant to say was, no, that was a slip of the tongue. It wasn't really the model for all of Europe. It was really just about Cyprus. We don't know what we were talking about. It won't spread. We won't take people's deposits. But then you forget, right, that, or they want us to forget, that what is it that the Troika, the IMF, European Central Bank, and the European Commission, what did they originally tell Cyprus to do before Cyprus accepted this second policy that has become now law? Well, they said take those deposits even that are insured. They said take 6% of the insured deposits and something like 10% above it. That was rejected by the Cyprus parliament. So they already are fully willing to go the lengths to any lengths to save this system before it melts down, even if that means depriving people of the means to sustain their own basic existence. Mm-hmm. Now, I brought up the Bank of International Settlements because what we've discovered over the past week has been planned for a long time. This is not overnight, this approach of bail-ins. And in fact, what we're seeing now is the uncovering of official policy documents sponsored by the Bank of International Settlements, the Bank of England, increasingly the Federal Reserve, to coordinate a global bail-in strategy. Because they just want to see, they're poking Cyprus now just to see what they do. But now that they have a certain feel for it, now it's going to get bigger. And in the case of 2012, on December 10th, there was a policy document by the Bank of England, now run by Canada's Mark Carney, and the FDIC. It was called Resolving Globally Active, Systemically Important Financial Institutions. What essentially is said, it did mandate directly this idea of converting deposits into shares, just to keep them alive. But there's a whole slew of these documents going back the year before that even, written by the same Bank of International Settlement, boards of directors, people like this. And we found that even in the Canadian budget plan, for people who think that the Canadian banking system is somehow some model for the world because we're just so conservative in our banking culture, we got news for you. Because our budget, the Canadian Action Plan of March 21st, 2013, both referenced the Bank of International Settlements, which it has a branch called the Financial Stability Board, also run by Mark Carney. And it referenced that it's following its prescriptions from 2011, not 2012, not this year, but 2011. And it literally says, and I'll just read you a little quote, I think it's important. On page 145, it says, the government of Canada proposes to implement a bail-in regime for systemically important banks. This regime will be designed to ensure that in the unlikely event that a systemically important bank depletes its capital, the bank can be recapitalized and returned to viability through the very rapid conversion of certain bank liabilities into regulatory capital. So, bank liabilities, this being the uninsured deposits. Now, what exactly is Mark Carney? And this is, I think, very important because it gives us a certain sense of the pedigree of the British Empire, of this monetarist machine generating global policy. Because he's a Goldman Sachs guy. He's not Canadian, right? He's Goldman Sachs. That was his former job before being brought into the governorship of the Bank of Canada. Mario Draghi, he's the guy who came before him at the Financial Stability Board, was a Goldman Sachs man, who then was brought into the Central Bank of Italy and has been a major opponent of our movement for years. Now, these guys, their job is to essentially ensure that the empire, the will of the empire is maintained. And the empire internationally, this is not a nation, this is not a mystical thing. The rule by the power of finance for an oligarchy, long known as the British Empire, which is the center of world finance, has never disappeared. This is something which, if anything, is more powerful today in one sense than ever in history, and yet ironically in another sense also much more weak as well, because their financial system is collapsing. So the Bank of International Settlements, which Mark Carney works for, is a very indicative thing because it gives us a sense again of the pedigree. And I'll just go through something because I was watching a documentary the other day called Banking with Hitler. This is something that was done in the 90s by the History Channel of all places. And what essentially this goes through is how the Bank of International Settlements was created by none other than the Nazis. It's a Nazi bank. It was created in 1930 by Hjalmar Schacht, the Nazi finance minister and the head of the Reichsbank, and Montague Norman of the Bank of England, who was the major sponsor of Nazism. And this is actually the reason why the bank was created. It was done because, first of all, you had a hyperinflation in the 20s, right, in 1923, induced by the Bank of England, the Federal Reserve, the other allied powers that told Germany, print infinite money, whatever it takes, just pay those debts. To the point that even if you sacrifice the value of your currency, which Germany did, right? People were, we all know the famous images of wheelbarrows full of money and people. So this created such a shock psychologically in the population that, well, what happened after a few months, right? It seemed to have done some good, but a few months of just being a trillionaire and not eating because no bread is being produced created a trauma such that the solution offered by Hjalmar Schacht, the whole City of London banking apparatus, became just trade in. We're gonna cancel the 1920s bailout system. We're gonna cancel the money printing system, and now given all of your trillions of Reichsmarks for these new Rentenmarks, but now with these new laws that involve sustaining massive austerity, lowering your living standards, fascism, to enforce it, because a democracy would never accept those cuts of living standards.
Yeah.
So these types of sums in the trillions to repay these debts couldn't be organized by regular banking system. They needed to create a central bank for central bankers. That was the BIS. Now, after the war actually got underway, and every single nation that Germany had taken over, starting with Poland, then going to Czechoslovakia, later on Holland and Belgium and France, they would not have been able to continue to build their machine if they didn't have access to those nations' gold and finances, which were kept where? The Bank of International Settlements. And so the role of people like Montague Norman of the Bank of England and those who occupy the board of directors was to ensure that there was a smooth transition of money from the taken over nations into the German war machine. And this was even long into the wars getting underway and people dying in the mud. So the intention then was what? To create a global regime. Why else did Wall Street, the Bush family, why did the royal family like Queen Elizabeth's uncle, why were these part of a global banking apparatus to fund fascism as the solution to the economic woes of the 20s? Well, they want a global dictatorship enforced by these psychopathic egotistical narcissists like Mussolini's and Hitler's, or today you could say Barack Obama's. They want that type of system where that's the most controllable to an oligarchy. And fundamentally, this is what never disappeared after Nuremberg. This is a system which has increasingly taken over our society since the deaths of JFK and since the destruction of the Bretton Woods. And it's come to the point now where we have to make a decision to say, well, either we go towards what Franklin Roosevelt was doing, because at the same period where Europe was getting fascism, the US were fortunate enough to have gotten a Franklin Roosevelt who understood the beast, and he brought in immediately not fascism, but glass-steagall. And glass-steagall is the thing that Mark Carney, Mario Draghi, all of these guys like Ben Bernanke have been assigned to stop at all costs, because it's there right now in Europe as a policy. In the US, our movement's been fighting for it.
I think we can say, similar to today or similar to Cyprus, at the time of Franklin Roosevelt during the crisis, there was also a bank holiday. It's actually a bank holiday that lasted 11 days. But what came out of that was actually a very efficient cleaning up of the system. So everything that had no intrinsic value was just written off the books. And banks were able to, after that, actually the legitimate banks were reopened after 11 days, and activities could continue, but it was a protected activity. It was an activity under the guidance of the glass-steagall law. So a banking separation to put on one side the commercial banking, and on the other side the investment, speculative, and saying, okay, if you want to speculate, you speculate with your own money, and you guys can eat one another, who cares? But you want to protect the real economy.
Yeah.
And I think also with that, as you said, right, Canada is also adopting a bail-in policy. And a lot of Canadians have been led to believe that our system is the banking system in Canada is somewhat different. We have this different banking culture that make us nice people, and we don't take a risk or anything. But this has been a lie. And I know you wrote an article regarding this Canadian housing bubble. Also, we've discussed the famous bailout that occurred in Canada in 2010.
Yeah.
So I don't know if you could say a few words on that, just to illustrate a bit the situation here now and why we're in the same dynamic than what's happening in the world.
Oh, sure, yeah. Well, I mean, this is something which really came to our attention in this new form in 2012 with the Canadian Center for Policy Alternatives, who wrote a very important report that just illustrated that what everybody believes about the soundness and stability of the Canadian banking system is founded on a deep-seated fraud, and that, in fact, were it not for the $114 billion of bailouts between early 2009 and 2010, were it not for that continuous injection of what Mark Carney prefers to call emergency liquidity injections, but rather this is just a bailout by another name. Were it not for that, then it's guaranteed that at least 3 of our big 6 banks would have collapsed. And they were underwater for a period of time such that the bailouts being given to the CIBC specifically, Bank of Montreal, Scotiabank, for a certain period during that interval, exceeded their actual their market value of those companies, of those banks. So how did this work? Well, this wasn't your typical. This wasn't the typical type of bailout we saw in Europe or the U.S. specifically. This was a little different in that there were 3 conduits used. What they point out in this think tank, what they point out in their policy document is that you had the Canadian Housing and Mortgage Corporation, which the thrust of most of the bailout came from that institution. They produced $67 billion to buy up toxic mortgage-backed securities and other things from these books, the books of these big 6 banks. You had the Bank of Canada, which did a certain amount, and then you had the Federal Reserve, which also provided liquidity for our banks by lowering its discount window. And in total, well, the CMHC had to create something called the Insured Mortgage Purchase Program specifically for that injection. This was done primarily because, well, Canada's economy is driven by financial games. We don't have an economy anymore. We don't have industry. We don't have manufacturing. Even resources, people think of as being, we're a resource-based economy. We sell agriculture and natural gas, and that must be our economy. And in fact, what the reality is that these are only 7%. The natural resource exploitation, 7%. The housing sector, including securities, things like this is 27% of our GDP. So this is our economy at this point. And this was created primarily via the takedown of the Canadian glass-steagall, what was called the 4 pillars. A lot of people, a lot of even policymakers who we talk with are not fully familiar even that there was such an important thing called the 4 pillars for a very long time in Canada's history, which were taken down long before the U.S. glass-steagall was taken down. So It's not exactly the same thing, and that's in a certain sense, but the principle of the four pillars was simply that you have insurance, that's in one universe, right? You can be an insurance like a Sun Life or something, or you're a deposit bank, or you do securities and financial instruments that use riskier investments, or you're a trust. But each one is a pillar, and each one is kept separate, so you can't have what today we know as universal banking or too big to fail in the way that we have it. Now, how was this bubble created? Well, Canada's sitting on an overblown bubble. As you've mentioned before in the past, the big six banks were all downgraded this year.
Yep. Right.
Why were they downgraded? Well, partially we have a huge amount of consumer credit, of consumer debt, which is out of control. So this is something like 160% of people's earnings are debt versus 110% in the USA. Then you have a housing bubble which has now exceeded the average price across Canada than the US houses were at the peak of their bubble in 2007. Before that bubble popped, ours has far exceeded, on average, the price. So you have, looking at Vancouver, when you look at a lot of the regions like Toronto even, and even on the East Coast, the prices over the past 7 years of houses have been doubling, if not in some cases tripling and quadrupling. And how has this been created? Well, by extending, on the one hand, insurance through the CMHC into the securities sectors, which now securitize these housing loans, they were able to then guarantee a super low risk investment for foreign investors on the one side. So people in hedge funds trying to save their money from the economic collapse, they're just trying to put it anywhere where there seems to be low risk. Okay, so they put it in the Canadian housing. It seems like a safe bet. It's going to be guaranteed if the house goes under. So on the one hand, you have all these places, these communities where there are nobody living in these big houses. The values are just going up because people are buying on them, but they don't want to live. They live in Saudi Arabia or Abu Dhabi. They don't care about living in Vancouver. So on the one hand, these are becoming more and more expensive such that people who want to have a family and want to live in them can't. On the other hand, you have the diminution of interest rates to actually encourage people who can't afford houses to be able to buy up at a super low interest a mortgage, right, to get in debt. So this is where the personal debt, a lot of this addiction has been created. And now what happens, a study was just produced that demonstrated that even if interest rates were increased at 1 to 1.5%, you can have immediately across the board defaults of anywhere between 10 and 16% of our houses. Nobody could pay those mortgages, let alone all of the leverage built on top of whatever is securitized in that sector. So you've got something which could not have been created had the four pillars not been destroyed. Right? The very active insurance through the CMHC, which today it's upwards of $600 billion of insurance, government insurance, taxpayer insurance. This, in 1988, at the time the four pillars was being taken down by Mulroney to prepare for NAFTA, at that time it was $50 billion and no more. And then we look at, as soon as Harper came in, this has been the ceiling has been successfully raised several times, from 200 billion to 300 to 350 to 500 to now to over $600 billion, just to keep the bubble going. Because if that was not there, you couldn't guarantee the investments and you couldn't encourage the foreign investments and the hedge funds and other things to create these huge profits that amounted in record-breaking profits for all of our big six banks in 2011. Right? Because that's the additional irony. While everybody else in the world was tanking, our Canadian banks were coming out with huge profits. And the key that the Canadian Centre for Policy Alternatives points out in their document is that the reason why this hasn't gotten more coverage is because Canada has the most opaque, least transparent banking system in the world. And that's big for a lot of people to really think about, that the only reason why we're getting away with the lie a little bit longer is because, unlike in the US or unlike Europe, where banks have to demonstrate what their risky exposures are to derivatives, like we know JP Morgan has $78 trillion of derivative holdings. We know that. We know the quantity of bailout. That's public. In Canada, it's not. And so the type of digging that they had to do was much more, they had to go through deeper digging in data sets to uncover this. which most people are just, they're not equipped to do that necessarily. So everyone's going to lose everything. I mean, this idea of a bail-in not being used in Canada because our banks are so sound, bullshit. And Carney even said so, just to be quick. I wanted to say this earlier, but I didn't go through it. But Carney even pointed out in 2010, in a speech he gave to Geneva, that this, even back then 3 years ago, was his intention to carry this forward. Not because it's his idea, but he's a Goldman Sachs man. He's used to following orders. And he gives the speech where he just simply says, one, he says first, if the bail-ins had existed in the time of Lehman Brothers collapsing in 2008, instead of losing $150 billion, they're saying, well, we could have just lost $27 billion. Right? And then he goes on to say, and I quote, statutory bail-in authority could fill a crucial gap in the resolution toolkit and should catalyze private alternatives to the restructuring process. So private alternatives, again,
Yeah.
see what he's doing, right?
They're opening the door to new ways of grabbing money. They make it vague, but with the case of Cyprus, we see that it doesn't seem that there's any limit, unless the limits that the government will put, if the government is a courageous one. Otherwise, they're just going to grab whatever they want.
Exactly. And they're always pretending that somehow the system is fine and we can't use government solutions like glass-steagall. It has to be private-based solutions. He goes on and he says, an example of a promising market-based mechanism is to embed contingent capital and bail-in features into unsecured market debt and preferred shares issued by financial institutions. Preferred shares, well, what is that? That's exactly what happened to Bankia in Spain, when you had all of the, over 1 million depositors were all induced to put their shares into these Spanish banks to get preferred shares, simply meaning you're going to get more interest rather than a common share. And as soon as they did that, then the banks coordinatedly cut all of the value, which was $2 a share, down to 1 euro cent. Right? So they converted those preferred shares in an emergency down to common shares, and then those, they gave them a haircut. It's more of like a decapitation from $2 to 1 euro cent in 2 weeks, which was the biggest theft we've seen so far. But again, this is just small little guinea pigs being set up. And so Carney's going at this now as a Canadian and global solution. And again, he goes on to finish his little line here, saying its presence would discipline management, since common shareholders would be incented to act prudently to avoid having their stakes diluted by conversion. So the axioms are just, they're transparently disgusting, but things like this betray the belief, or at least the belief they want us to have, that the behavior of the bank is somehow going to be made better if you can get the bail-in in, because all of the shareholders now will want the bank's behavior to be more safe and sound and responsible, as if that was what determined the bank's behavior, was the shareholders. And at no point in history has that ever been true. Nowhere did anybody vote to take down Glass-Steagall. The shareholders of the banks never did that for the 4 pillars. What you have is the Bank of International Settlements. You have the London banking networks controlled through the Bank of England, run by Carney, through the Rothschild banking cartels. And these are the ones that issue and standardize global behavior for their system, not the shareholders of the banks.
Yeah, I think it's the important point to make is that we're inside a very long fight between nation state and an imperial system that's been using various banks to actually reduce nations to the level of a simple colony. Like, we're going back in time. We're going back to a form of imperialism, which doesn't mean just a bunch of guys trying to make money. We're talking about policies of population reduction. The situation in Europe, places like Greece, it's the unemployment, the fact that medication is almost impossible to get. Young people cannot eat. You're talking a policy that kills people. And these people will tell you that let's make this, the people in the finance say, let's make those sacrifices so we have sustainable banks. Well, at a certain point, you have to decide what's your priority. Are you going to be totally blinded by the policy, by a monetary policy, to say that money is the cult leader, or are you going to go back to nation building? How we're going to actually relaunch a real world economic recovery, which means to sustain 7 billion people and more. Doesn't mean population reduction through green fascist policies of anti-industrial development or massive austerity. This is actually what an explicit policy coming from the British Monarchy, the Queen and her poodle Prince Philip, who has been very clear about that, stating many times that were he reincarnated, it would be reincarnated as a deadly virus to reduce population. And that's what we're actually facing. This is that kind of insane system. And the glass-steagall reform is the first step to have a firewall between, yes, commercial and investment banking, but more importantly, nation states versus the imperial population reductionist system. And we're in this fight right now. The CRC and their colleagues throughout the world are right now fighting to re-implement that law in various countries. In the United States right now, our movement with also hundreds of activists have been able to get 12 states to introduce a legislation in their legislature to get the federal government to endorse Glass-Steagall. Also, we have in Europe, in Europe the situation is getting just horrible, more and more horrible by the day, but there is a lot of support for the Glass-Steagall coming from Germany, Italy, even from the Great Britain. And at the same time here, our mobilization has been going on for a little while now. We're getting a lot of support from it, but the problem is, and that's where we're going to need everybody to join this fight, we have a lot of politicians who have been giving us the famous line that the Canadian banking system is fine and everything. But as you heard from Matt, I think it's clear that we are part of this international dynamic. We are not on top of things. That's our Canadian system is also falling down the hill, and our politicians, all parties included, have been giving us have been playing the same audio cassette that Canada's banking system is the best in the world, which is a lie. So we're going to have to tell them what's really happening, and at the same time, we have to get those people to realize that elections in 2014 is very far. That right now there's a need for a mobilization right now to implement this Glass-Steagall, not in a year and a half, but right now. Mm-hmm. So you need to build some courage and to actually get those people to drop their fantasy world about winning the election. That something has to happen now, otherwise Canada's economy is going to go down the drain. So I would urge people who are listening to join our fight. Go on our website, committeerepubliccanada.ca, to download the appeal for Global Glass-Steagall, which everybody should sign, including your member of parliament. We have also a mobilization leaflet on what's been discussed here regarding the Cyprus situation, the bail-in situation, and why this is an international conspiracy against nation states. And also, give us a call. Call us at 514-461-7209 to get active with us, make a financial contribution, and be part of our activities. I think that right now is the time to move. There's absolutely no reason to wait any longer. So with that, I would say thank you for watching, and we'll hear from you soon. Most familiar with what's been happening, since 2008, when various banks at the international level went bankrupt, and which then led to a policy of bailouts. Now, those policies started with the Bush Jr. U.S. administration on the end of 2008, and then that policy was continued by the Obama administration very fervently, and at the same time also in Europe by the European Central Bank. Now, this was a policy where governments were involved into buying out the toxic assets of those various banks, JP Morgan, Chase, Citigroup, etc., in order to keep those banks afloat. But obviously, that meant that governments had to implement various policies of massive austerity on their population. We've all heard, various horror stories from Greece or the United States where people need food stamps to survive. Old people cannot afford the medication. Young people cannot eat. Also, like various spread of the increase of, for example, the suicide rate in Europe, unemployment, etc. So there are physical consequences of those bailouts, which was also accompanied with a policy of what was called quantitative easing, which is basically a hyperinflation where various institutions were involved in printing a lot of money to try to keep, again, that banking system afloat. Now, one of our colleagues in the United States made a small graphic of that quantitative easing that, since the beginning of it, so over last. Good morning. This is April 6th, 2013. Welcome to another edition of the Committee for the Republic of Canada's Leadership Discussion. My name is Jean-Philippe Lebleu, member activist of the CRC. I'm accompanied with Matthew Arrett-Kump, also member activist with the CRC. And today we're going to talk to you about the actual financial and economic world crisis, but more specifically on the latest developments regarding the island of Cyprus. I'm sure some of you are familiar with. And we're going to talk about that and the implication of what's happening there for the whole world, but more specifically for Canada. And I think maybe just as a start, I'd like to just clarify a few things for people regarding this financial crisis that we are in right now. That first, what we're in the last 3-4 years, there's been about $4.4 trillion that were printed as a form of hyperinflation. And you can also see on that graph that the banking activities actually have been reduced in the sense that money was not lended for the economy as it should have been. There's actually a reduction of the lending practices. And the other little red line that you see represents what we call quantitative stealing, which is the new form of insanity that we see right now in this attempt to sustain the imperial banking system called a bail-in. And we're going to jump into that question, try to understand what that exactly is. So I'd like to let Matt maybe start off talking about what's the situation in Cyprus and how this seeing, especially since 2008, 2007, is actually the result of a many decades long crisis that started in around the 1970s, where our system of national development, this idea of economic development, there was a radical shift where we went away from the development of the productive powers of labor towards a money policy where money became the intrinsic value of the world economy. So we went away from science, went away from industry, went away from education, went away from healthcare, and we went back into this idea that money is the master. Now, people are